welcome to a Pulver Report bonus session. It's 8:30. We're going to start a little bit early for non-farm payroll, and let's kick things off with the risk disclaimer. Just give me a moment here. All right. Let's dive into the risk disclaimer. We understand there's risk in trading. Please and always use trade capital only. Do not trade with money you cannot afford to lose by trading stocks, options, futures, forex, cryptos. You know the risks. Everything we're talking about here today and for any of these live sessions for educational purposes only. If you're following me out there on social media, make sure you're following the real me, youtube.com/Chris Pulver, best place to find me, Mondays and Fridays at 9 a.m. Eastern time. You can go to the YouTube page, click on upcoming live streams and see what we have. Next week is Labor Day on Monday, so I won't have a live session, but I might post a video. We'll see. So look for that. Just make sure you click that notification bell and subscribe to the channel, of course, and you can get those pop-ups and notifications. Otherwise, Real Chris Pulver on Facebook, Instagram, Twitter, and TikTok. I don't direct message anybody. Make sure that you're following the real me. If anybody claims to be me or is soliciting, please report them, flag them, and get them kicked off of social media, if possible. It's tough, but anyway, that's that. Let's get into the charts. Happy Friday. Non-farm payroll just came out. Let's take a look at the numbers, and I'll get logged into the session. Say hi to everybody. Don't need that. Don't need that. Don't need that. Don't need that. All right. So dollar index, a little bit of a red candle. I don't know if we missed on non-farm. I'm checking it right now. I was just out walking the dog. Let's see here. Senate bill, full inventories cannot ensure a safe winter for the European Union. Oil producers preparing for the European Union's oil embargo. All right, this, let's see, adds to earlier gains after jobs report, trade slightly ease bets, Fed swap showing. All right, we're going to take a look at the CME watch tool. New Zealand Swiss is 60.20. Hey, flex traders, we've got 90 pips of profit on the old New Zealand Swiss. Let's stay with it. Let's get our 100 pips today. 6020. If we get up to 6030, 6050, let's make sure we're looking to protect those 100 pips from our 5930 entry. I see that the Swiss is pretty soft this morning. That's a good thing. So we'll see what the dollar Swiss can give us. I know the dollar might be a little bit of a miss. The euro is on top of the food chain today in currency strength. Swiss yen still sideways, but hoping we'll see some pretty dramatic move to the downside based on historical highs and crazy or extended conditions. And euro Swiss getting a nice big candle on the day. Let's make a run to 103.50 and 105. Euro Swiss, I know you can do it. I believe in you. Here's the currency strength. Down to weight, it's 835, so we should have an update on the currency strength. We have yen, Swiss, and dollar to the downside, euro, Aussie, and New Zealand to the upside. Aussie, New Zealand, some risk appetite. Euro, maybe some recovery. ECB rate decision will be next week on Thursday. And we'll see if the ECB is going to raise rates another 50 to 75 basis points. That is expected somewhere in there. So here's next week's calendar. And here you go. Take a look at this. If you go down to Thursday, you can see that the expectation is a 75 basis points hike. So we might see some strength priced into the euro. Wouldn't be a bad thing. Curious to see how that affects the dollar index, the DXY, and we'll see what the Eurozone says. Obviously, inflation printed this week higher. It's 9.1 year over year. UK inflation is high. US inflation is high. We had one downtick to 8.5 from a 9.1. So I don't think the word peak inflation can really be tossed around right now. But I know everyone wants to throw it around there. So I did have some really solid technical analysis to talk about today. Just to kind of put all this in perspective. Also, while I'm at it, for everyone that's watching, let me get logged in and say hello and make a little recommendation to the Beyond Capital Group channel. All right, who's in the house today? Deirdre's in the house. Good morning. Denise, good morning. Don, good morning. Tara, good morning. Joseph is here. Peter's here. Bruce, Ranjit, Jason, Daniel, what's happening? Steve, good morning. Lady Van Posh, good morning. Chris, what's happening? Keisha, what's happening? Good morning. Gail, good morning. DPS, nice to see you. Craig's here. All right. Rec, good morning. Rex, good morning. Jeremy, Marilyn. John, nice to see you, John. All right. Let's see. Hourly earnings in red, non-farm in green, unemployment. All right, yeah, I want to see what the numbers were for today. So I was looking at price action. Let's go to non-farm. So we have employment claims. Here we go. So 295 expected came in at 315. 0.4 for average hourly earnings came in at 0.3. We had a revised miss on the unemployment rate. So unemployment rate went up by 0.2 tenths. And again, I still think technically the dollar's overdue for some corrections. Um, I've been on that little bandwagon for the last couple of months, and not aggressively shorting the dollar, but just patiently waiting for the technicals to align, looking for some confirmations. So that's it. Morning, Ken. How are you, man? What I want to say is this. I went through my good friend Jared Johnson and I spent a couple hours together yesterday, and let me find our little YouTube channel. I've got a couple of videos that I'm going to continue to edit and post. I'm going to try to get one posted for today and then one for next week. Beyond Capital Group. So if you just do a YouTube search for Beyond Capital Group, you see my face and Jared's face. Subscribe to that channel for me, please. And I should have a couple of videos getting posted here in our playlist. So we just started this. Like I said, this is a hedge fund that Jared and I are working with, and we're super excited about it. And we actually had some great trades yesterday. We had some good discussion. And, his approach, my approach, it actually works really well together. I mean, we have different enough opinions to stay very objective with our outlooks. It makes us trade very different in a good way because we're kind of consistently hedging, which is appropriate for hedge fund, obviously, and least amount of risk, most amount of rewards. But anyway, what I was going to say is if we go into the S&P, okay, this is a major driver for the markets going this year. Okay, now I want to keep this really simple because everything that has been confusing about this year has been the Fed. The Fed doesn't know where they're going to be by the end of the year for rates. The market's trying to price it in. The market's trying to price in inflation. This data continues to change month to month. The expectations continue to change month to month. And guess what? It's forcing us to not really know what direction to trade. So, as I've said in my equities on demand trading room and my flex trading room, is I think it's appropriate to have cash and margin at the ready for the right confirmations, for the right positions to build, and to be able to weather any type of downside. And so what we discussed yesterday, there's a couple things I wanted to show, and we'll have a video on this. You can check it out in the Beyond Capital Group channel. But really quickly, I mean, does it seem out of touch or out of whack technically that our index, the S&P 500, can somehow find a way back down to this pre-COVID high? Does that seem impossible, yes or no? Because I don't think that's impossible. Right? Couple things that would make sense because we have some momentum from Jackson Hole. We're sitting right on this trend line that we had a nice little close yesterday to the upside that finished green. We're looking to see what Wall Street does today, of course. If it finishes green, then perhaps we are holding this trend line. But if we get back below, I want you to write this number down, 3,900. Okay, 3,900. If the SPX is below 3,900 with a close, I think that brings in enough bearish momentum that we start looking to make some fresh lows, okay? Or we come back to test those lows and we possibly settle back into a past resistance consolidation becoming future support right around that 3,400 area. So if we crack 39, I'm looking at 34, okay? Now, it might not fall in a straight line. It might be slow, but I think that this high is going to be very difficult to take out as with this, okay? So, how does September start off? Well, so far we're on a pretty rough foot considering Jackson Hole was, just a sheer bullish or bearish candle. Jackson Hole was a very firm message from the Fed that they're going to stay tough on inflation. I think it's more commentary, more so than them raising rates a ton. If you look at the Fed watch tool, it's not outside of 4%, even through the rest of this year, even through the rest of next year. It's not past 4%. So it could be like the second half of 2023 before the Fed starts to ease off. We're going to have to see what this inflation stuff looks like. All right. But a couple things. All right. We have this low to this high. All right. That's just a big swing. So if you grab a Fibonacci from low to high, this is your 50%. Now, again, Fibonacci swings 50% technically is not a number. It's not a Fibonacci number, but it is the equilibrium number. Okay. So if the market's going to balance and we have a correction, this correction towards this 50% retracement zone is actually a 30% correction off of the highs. Okay. Now, do I think that a 30% correction is healthy? I mean, considering buy on dips, it's very healthy. The average bear market is 37%. Could it get worse than that? Sure, things can get a lot worse. And there's a couple things. One is this past resistance becomes support, and this becomes a pretty amazing buy opportunity for everybody if you're paying attention. I still don't think I'm going to get super aggressive and just throwing out cash into the markets, because if we are going to see some surprise and we have some, new black swan event that's going to be in development, we've got Russia, Ukraine that's still going on right now. Times in Europe get even worse. The times in the U.S. get even tougher. If we see the job market, labor market's not as tight, starts to get worse, starts to see more cuts and slowdowns, contractions, and you throw in maybe China, Taiwan. You throw in maybe energy prices and crisis once again. I don't know. It might be some type of black swan event, but I'd say my biggest concern is this. I think the reality is somehow this market finds a way to revisit this pre-COVID high. And so I am trading lots of options and I'm hedged in most of my trading just in case. If the market goes up, I'll be fine. Market goes down, I'll be fine. Okay? Market goes down here, this is my biggest concern. Technically speaking, with this broadening formation and these lows that we had that technically matched up beautifully with that COVID crash low, this is the biggest concern. Now, do I think that's a reality? We have to have some awful things happening globally for that to be the case. Because right now, has everyone in stocks been flushed out? Not really, right? Anyone that holds ETFs, anyone that's long the indices, anyone that's long bonds, like, they're struggling. They're underwater. Most portfolios are down. Most hedge funds are down and softer this year. Okay, but crypto's been flushed out pretty nasty. Tech has been flushed out pretty nasty. If we're gonna have the final burst, this is possible. I mean, this would cleanse virtually everybody, unless you're hedged, unless you have options, right? Unless everything that goes to the downside, you can ride it all the way down too. Because guess what? Even if it gets all the way down here, there will be buying opportunities. And I know it might seem like that's impossible. That would never happen. Well, we could have this thing go all the way down here and then over the next year or two, go all the way back up. And this might be the most painful reset that no investor is going to take advantage of, because they'll be so frustrated and sick and tired and annoyed and emotional about how bad it is that they won't have the courage to buy anything else. And they'll just sit on the sidelines while the bottom gets put in and we start to get a relief rally like crazy. And you're talking about 1x, 2x, 3x upsides, and nobody's participating because they're just so downtrodden by how bad it gets, right? Yeah, Craig, stagflation. I mean, is stagflation enough to warrant a massive collapse? No, I don't think so. I think stagflation means this. Stagflation is probably more, lower for longer, consolidation for longer. The trend behavior starts to go away. We have some structure here where stagflation and slow growth and sideways movement. You could see this concentration into fewer stocks of high quality, but stagflation I don't think is enough to drive everything lower. I think default around the globe could be a problem. I think World War III could be a problem. I think an oil crisis, if U.S. oil goes to $250 to $300 a barrel, could be a problem, right? But if those aren't happening, I think stagflation is just going to be lower for longer, less volatility, more consolidation, right? Or there's also hyperinflation, right? High inflation, crazy, right? Hyperinflation. Hyperinflation could be a problem. And if hyperinflation was met by the Volcker type raise, right? If the Fed, which probably doesn't want to be above 3.5 to 4% this year, if all of a sudden they're like, you know what, screw it, 8% Fed rate, 10% Fed rate, that I could see being a problem. I think that would disrupt everything. But if we're not at those points, I think it's consolidation first. Maybe some uncertainty that brings us back to this pre-COVID high. Again, technically it makes sense. And here's what I'm going to say. I want to leave you with this as far as just this outlook and analysis. And you can see more of it on that Beyond Capital video that I post in the next couple of days. At the end of the day, as confusing as the Fed is with the uncertainty of where they're going to be, as confusing as the markets have been with what's bullish, what's bearish, I honestly think the easiest thing to get comfort in is the charts. So let's look at the charts and see what makes sense. This to me made sense technically. And usually stocks are more rational, but we might have so much chaos out there with the news and the commentary that it actually might come back to be really clean and really simple and really obedient on the charts. And so I'm going to look at the charts. I'm going to trade what I see, and that should make the decision making a little bit more tolerable, right? If the market goes down and it's confirming, are you positioned for that? If the market goes up and it's confirming, are you positioned for that, right? That's what we need to look for. Okay. All right. So that is that. Let's take a look at currency strength, 847. Dollar's getting a little jump to the upside. We still have Swiss and yen to the downside. Aussie, New Zealand, euro still on top. Let's take a look at some other currency pairs. Dollar index, DXY. Zoom in. So the DXY did poke a high this week. We're still stretching to a pretty high bar count. Last time we had the dollar index touch right here. We're now stretched out to 260 bars. And on the dollar index, we're stretched out to this area, which is around 315 bars. Our euro dollar is stretched out to probably the high twos now. That level right there, euro dollar stretched out to 260 bars. And the dollar yen, we have to be close to 400 bars now. Dollar yen's at 140.75. And last time we touched this 200 EMA was back here in February. That's got to be close to 400 bars at this point. There's my last touch. We're now stretched out to 398 bars. So by next week, we will be stretching out to 400 plus bars on the dollar yen. With, by the way, a slight move higher. And on this daily time frame, we're looking like we're back up near overbought conditions. So we had overbought conditions here, a little bit of a dip, overbought conditions here, a little bit of a dip, overbought conditions here. We're not quite there yet. I'm looking to see if we have some divergence. On the weekly time frame, it's really obvious. If we go to the weekly time frame, this prints, I mean, technically speaking, I like these indicators. We have higher highs in price, but lower highs in momentum. We have higher highs in price, lower highs in the relative strength. There is hidden bearish divergence that should be printing by the close of today. And again, I'm not saying that we can't stretch higher, but the further we stretch away, I think the snappier this gets to the downside, right? And what is that catalyst? I don't know. You know, maybe the equities market just dumps and the JPY gets very strong for a short period of time. You know, we know that volatility can pick up with risk off trading. Volatility can pick up very quickly. So we will see. Okay, do you see a chance of another depression? I don't know. I mean, would you call 2008 a depression or a recession? I think a recession is certainly on the table. Depression, I don't know. We'd have to have a combination of, you know, hyperinflation, stagflation, possibly a global conflict that just continues, and there's, you know, it can just be I think it has to be a global catastrophic thing to be like super recession, or I'm sorry, depression. And I think my concern is it's going to be like a global depression. But again, until that stuff starts to line up, I'm not going to, you know, hypothecate it. I'm not going to say like I'm not going to doom and gloom it. You know, it's like let's trade the charts, focus on our trading, focus on our results, and let's grind. You know. All right. So anyway, that's that. We'll take a look at the dollar. Let's go oil, gold, silver. So with the dollar continuing to rally a little bit, DXY, some indecision near the highs. I'm looking to see how this prints. You know, weekly time frame, some hidden bearish divergence. Anytime dollar. Otherwise, as I talked about this week in my trading rooms last couple weeks, you know, are we going to stretch up into this 2002 pocket level? We might have another big run where, you know, this major resistance, this major support, if this is wave 1, wave 2, wave 3, if all this was a wave 4, which is crazy over a multi-year period, and this is still stretching to a wave 5, I mean, could we stretch all the way up here to the pocket? Could we stretch all the way up here to the 2000, 2001 highs? Sure, we could. And then we correct. And we probably correct in a big way with at least an ABC. But I don't know if the dollar is going to stretch that much without having a correction first. I mean, these bar counts are as high as I've ever seen on daily timeframes with multiple timeframes. So, and multiple currency pairs. But I don't have any confirmation to aggressively short the dollar because we don't have the turns yet in the trend line breaks. Yeah, exactly. Yep. Trading continues for sure. And that's all we have to do. And again, what's appropriate for trading is make sure you're prepared. If the market goes up, the market goes down, the market goes sideways, we have to trade. So it's our job. It's all about risk management. It's all about, what we select to trade. Are we trading Forex? Are we trading currencies, or cryptocurrencies? Are we trading stocks and options? Are we trading futures? Are we, screw all that stuff. We're just going to go into real estate. I'm buying gold bars or silver bars. It's like, look, people are investing somehow. I don't think anyone out there is super comfortable with not trying to make money if they just have it sitting in the bank. Last time I checked, with a 0.25% APR, yield from a bank, or like a 1% high yield savings, it's kind of embarrassing when inflation's 8%. So I think at this point, 8 to 10% is a break even year, and it's preservation of capital. So you're not going to get that yield by just, not watching this stuff or not paying attention. There has to be some type of care about your financial future. So, all right. That's dollar index stuff. Let's go to gold and silver. This has been correlating strongly with the dollar. Gold, I'll go back to the daily time frame. So we're at 1708. We had previous lows at 1676. So a pretty decent green candle on the day. Do we come back and revisit the same low? Is this a bit of a range low? Maybe we'll find out next week after today's non-farm settles. Maybe the dollar index finally tops out and starts to retrace. Gold will probably bounce from there. If gold breaks the downside, let's make sure it actually closes down below that, because we do have some really strong multi-year support sitting right here around 1675. This goes back to 2020. I think we have some pretty good range trading. Because if that is the case, if it's breaking lower, if we have the dollar that's that much stronger, and gold is going to break down here, this is a pretty solid double top candidate that would just be a move back into previous resistance becoming support, probably between 14 and 1300. Again, that's all dictated by the dollar. I think technically the dollar's due for a correction. The longer and more stubborn and more rational it gets, I think the more amazing the fall is going to be when it's time. But I don't know when that fall is. Hopefully when it's a trendline break. Hopefully when it's giving us the signs with candlestick patterns, or price patterns. But watching gold pretty closely. Silver's already made some fresh lows, so I'm watching this one. We're at 17.97. I'm willing to take silver all the way down here to these lows around $14 and still buy it. We might have some, the bears might score a point like they did this week, and we might pop right back up to this monthly pivot. We might pop back up here and stay in this channel. Channel support, channel resistance. Okay? We'll see how that plays out. Crypto, Bitcoin was hovering around 20K this whole week. We're still there, 20,200 and actually 20,300 as we're looking at it right now. I still think that it's vulnerable. I don't like how this looks from a technical side. The bears seem to be in control with that big flush down. Another big flush breaks. This looks like we have some bear flags. Another push down is 18,000. Another push down is possibly a bit of a falling knife feel, but maybe 15,000, 12.5, and 10. And truthfully, if I was more confident and I wasn't a little hesitant to throw in some more cash, I would say I would just put in at these levels and do limit buys. But instead, I think I'm just going to wait for a trend line and see where it breaks. If it starts to round out here, I'm probably not going to buy. If it comes back to 18,000, I might look for a rejection and get on the trend line, then take a buy. Otherwise, I'll just wait and see how low I can get it with a trend line break. Maybe it's 12.5, maybe it's 10, like $10,000, maybe. Or we just might have some consolidation. There's going to be a big Ethereum halving, or the proof of work to proof of stake, I think is what it is. Proof of stake. We might have some consolidation coming on Bitcoin and Ethereum. Okay, so if there's some consolidation and it holds 18,000 lows, that'd be pretty good. If it breaks through, I'm still looking for some lows and some divergence to then build a bullish pattern off of. But again, a lot of price confirmation still needed. All right, so that's Bitcoin. Ethereum, we'll take a look at some currencies. Ethereum still hanging, but we're potentially vulnerable to the downside. We have that September pivot around 1673. If that gets hit and rejects, that could be a nice resistance point to push it back down towards $1,000. Aussie Canadian. I think Aussie and CAD and New Zealand were pretty firm today. I'm still bullish on Aussie CAD. I'm still bullish on Aussie Swiss. Hopefully we can start breaking some highs, get back into this pocket. Aussie Yen. pushing back up towards highs, potentially a rising wedge that may end up striking some new highs towards this parity level, 100. If not, I've been telling traders this. I mean, look, just follow the alignments. We're not breaking trend lines yet, so there's no reason to sell the Aussie yen. But if we start breaking this trend line or this trend line, then yes, we can sell the Aussie yen. There's resistance here, there's support here. But if this just keeps drifting higher, I think we run into 99 or 100, which is parity, and then from there we have a bigger correction coming. Aussie New Zealand, they're going to be neck and neck, but we're trading at 1169. We still have a sell trade in for the flex room at 1150. So I'm just going to ride that one out a little bit, see if we can come back down to this pocket at 1075 or 1050. Try to grab a few pips there. Aussie dollar, if we have a chance to buy it at 67, I'm looking to buy it at 67. CAD Swiss, I'm long. Let's go. Let's get up to this high at 7,600. Let's fill this pocket at 7,650 and beyond. CAD Yen and Aussie Yen are pretty similar. We're looking to these highs. If it breaks the trend line, we're looking to sell it. Just follow your alignments. I know I'm going at a rapid speed here, but you can keep up. Swiss Yen, September pivot. We actually talked about this yesterday in class. If anybody's interested, you want to take a screenshot of this. Do I have a hyperlink? I have a hyperlink. I'll share this with you. So I did this yesterday in my flex room. I just started talking through our currencies of notable levels on the September pivots. So we have a new September pivot that printed yesterday, and most of these I'm looking for. If the Aussie ends up high enough, I'm looking to sell it on confirmation towards that monthly pivot. Aussie New Zealand's high enough, I'm looking to sell it back towards that pivot. Aussie dollar's low enough, I'm looking to buy it low enough towards that pivot. So I have, the pivot numbers plus what I would be doing, only buy if, only sell if. If you want to follow that, here's a screenshot. I'll post this in the chat. Let me join here. Let me get my... There we go. All right, that way I can say hi to everybody in the chat. Peter, that's good. By buying the dollar-only stocks or only buying dollar stocks, my pound wealth is well above break-even. That's good. Well above break-even this year. Great. This is September 2022 monthly pivots of interest. There's a hyperlink in the chat if you'd like to take a look. So of the currency pairs, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 currencies of the 28 majors that we trade. Majors and crosses. So those are pretty interesting. Again, confirmation, looking for extended conditions, waiting for some candlesticks and a price action to support where we're going. But we do have some pretty nice levels to trade back to. Okay, that's Euro Swiss, Euro Aussie. I'm staying out of this one for right now. Euro CAD, staying out of this one for right now. Euro Swiss. Euro Swiss is my bugaboo, but hopefully this one will be paying nicely. It's 98.44 right now. We're creeping up some highs. We found the July pivot, all right, and we're looking to see maybe a pullback and find some support off this this September pivot. So if we pull back, that actually was the August pivot that I meant. That's August. We pull back to September and bounce. Hopefully we're going to see this thing start plugging away and eat up this pocket here at 103.50. So I do have some stacked orders. I have some pullback orders as well. I'm trying to build a little bit more off these lows, keep my trade size small, but lower my cost basis little by little. My break even right now is just above parity. Okay, just above parity, and my target is 103.50 and 105. That profit window for me is a big chunk of profit, and I will be happy when this saga is concluded because that will be worth some pretty good bucks. And I told traders this in my flex room, I will add up everything that this trade has been, from profits to losses to commissions to rollovers, everything for the last year plus. I will find out exactly what that Euro Swiss is paid. It should be pretty solid. I mean, I'm guessing I probably lost about 5 to 10% of the profits if it's closing up. Probably 5 or 10% of the profits to commissions. But still, I mean, fine. I'll just keep the position. I'm not going to dump it, right? All right, that's Euro Swiss. Euro Pound, keeping with robots. Euro Yen. This one is breaking to the upside. I'm also hedged long on Euro Yen, so this one's heading higher. That's good. I'm going to see where this one wants to go. Do we get all the way back up to these highs again? If we do, good spot to take some profit or start putting in some trailing stop losses if you're long, because from there we can turn and we can come right back down. So more consolidation ahead, but we'll see what this euro yen wants to do. Otherwise, just follow those alignments. Euro New Zealand, pretty messy on this one. Euro dollar, anything. Are we above parity? We're hanging out, just kind of clinging to those parity levels. Look at the indecision right now in the dollar index. So dollar index, DXY, euro dollar, pivots like crazy. We have a couple pockets at 101.20. A lot of indecision here on the euro dollar. Again, decent bar count, 260 bars. This low to this low. Do we have enough to start justifying a correction back to this 200 EMA? Can we get back to 106, 107? I think that's a fantastic correction coming on the dollar. That would translate nicely into the euro dollar for a little bit of a squeeze. The ECB raising rates next week. If they do raise rates by 75 basis points, okay. Again, it may not help the euro though. It may be out of necessity. The market's like, well, the eurozone's in trouble anyway. So we don't know. We don't know how this will react. But parity and 20 plus year lows, I would like to think we're not going to go too much lower. But if we do, we're still on, the left side of this trend line. So if it stays lower, 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 stay with it, and eventually we'll make our way back up to that 200 EMA, and we'll gravitate towards this outer trend line, and we'll come back up to all these pivots and stuff that are available. But confirmation is going to be key, and this dollar is a stubborn son of a gun right now. Pound Aussie, we're breaking lower. So the last couple of months, we've seen lower highs and lower lows. Told traders to stay bearish on that pound Aussie. Pound CAD, we're also pushing lower. I've got a buy trade down at 1.50. Pound Swiss, a lot of consolidation here. We'll see if we can get back to 1500 or 1700. Pound Yen, really choppy. Leave it alone. Pound New Zealand's pretty messy as well. Pound Dollar. Pound Dollar, we're coming back into the kind of the historical lows. We're at 1530. We had the COVID crash low around 1450. So around 1400 to 1450 COVID crash low. That's also post Brexit. So I mean, the pound dollar really hasn't been much lower than what we had in 2020, according to our FXCM feed. So there's about 30-year lows right here at 1500, 1400, and we're pretty darn close to that with some overextended conditions. Also on the weekly chart, overextended conditions, oversold with divergence. Hopefully we get a snapperoo, snap back up, start to challenge a high. I've been really keen on trying to get back to 24 and 2600. Maybe that's a three-wave move. Maybe we have to have a bottom, put in a three-wave move, get back to this high, get back to that pocket. I'm long on pound dollar. I'm just slowly building. Also looking for some confirmation. New Zealand CAD, trying to hang on to this one to the upside. New Zealand Swiss, we're in profit on the upside. We'll see if we can grab some profit today. We're at 6,006. Chart alarm went off this morning at 60020. So I'm still trying to hold out for at least 100 pips. 59.30 was our entry. 6030 would be 100 pips. So that's my minimum. New Zealand yen. Look at this on the daily time frame. Daily time frame. Hey, can everyone do me a favor? We got a pretty decent crowd watching live. Can you hit that thumbs up button for me, please? Just really quickly. Let's see that get up to like 50, 60. Everyone watching. Thank you. Keep hitting it. Let's smash it. New Zealand yen. If we get up into this green box around 8650 to 8700, I'm looking for a short. Okay, up here to the highs, looking for a shorting opportunity. A lot of range structure on this New Zealand yen. So if we have equal highs, looking for a chance to sell it nice and high, take it back down to range lows. So if we could sell this around 87 and we could settle this in for around 80, that's a pretty good chunk. Okay, so I like New Zealand yen, watching that resistance area. New Zealand US dollar. So I said this week it may be a head and shoulders, but it looks like we did poke the lows. So it's no longer head and shoulders. But we could have a channel like so. We might see some more consolidation. If we can break above this resistance threshold, then we can head back up in the channel resistance up here around 67.50. There's still a big FOMC pocket from, this looks like April and May from, it was a Fed rate decision back in April or May. FOMC something. Okay, but right now, just looking for some consolidation, and we'll see how just extreme this dollar wants to get. Dollar CAD. Dollar CAD's trading at 31.29. Did anybody short the dollar CAD this week? I know we put in a couple of orders in Flex. We put in a 3,300, 3,350. Those didn't fill. We had buy trades down here at 26.50 and 26. They didn't fill. It's been really sloppy, but if anybody shorted the equal highs, it's about 100 pips or so. I didn't. I thought that was a little premature, just because I thought we had higher lows here and match that, and you have higher highs here. So I was willing to look for a shorting opportunity if it came up to resistance and then short it, but it never hit those channel highs. So that's why I had penny orders at 33 and 33.50. Right. But if anybody shorted it, hopefully you're up some pips. Short it high, right? Buy it low, sell it high. You know the deal. Dollar Swiss trading at 98.35. Chart alarms are set 99, 99.50, and 1.00. Those are profit levels that I have. I'm up about 300 plus pips on this dollar Swiss right now. Let me confirm. 343 pips in profit and running. And hopefully we will continue to see this run up. Whether it's stronger dollar or weaker Swiss, combination of one or the other, I don't care. I just want to get some profit up here towards parity. Dollar yen, 140.46. High bar count, overextended conditions on the weekly time frame. We should have some divergence. Again, it doesn't stop this trade. It doesn't force this trade to turn until we have confirmation. So where's our confirmation? We're going to have to wait for this trend line to break. There. Until that trend line breaks, I wouldn't be forcing a bunch of shorts on the dollar yen. We do have a nice pivot cluster with the monthly and the weekly right next to each other. We have some pockets as well around 137.50. We could come all the way back down to challenge this low at 131. But that confirmation is going to have to be key. So we start rolling over. We have to get that confirmation to trade it there. All right. I will take a quick look at the currency strength. So dollar after really the dollar didn't move even though it was non-farm day. JPY is weaker, Swiss is weaker. Swiss is coming off those lows a little bit. Euro strong, Aussie New Zealand just backpedaling a little bit. CAD is in the midpoint, pound is going softer. Volatility on the vertical axis it's not great. It's medium, right? Medium volatility today. And we'll see where things settle in. So 10 o'clock, equities on demand. Let's see where the Swiss goes. Hopefully it just continues to push lower. I'd like to see that. I'd like to see the dollar flush lower as well. But guess what? Summer trading is officially over. September is in full effect with non-farm payroll. We are going to see what the market's made of. Is September effect going to be a bearish month in stocks? Are we looking at that pre-COVID high for the equities market? Are we going to make a new low in stocks? And look, there's some crazy stuff out there. You go back 70 years in the S&P. If we had a horrible first half of the year, usually the market never finishes lower than that, right? If you have this big flush down and the market rallies 50%, you never see the market make a fresh low. I'll make one more mention here. I do have this screenshot that I wanted to share. I've talked about this a few times. This is 1962 and 1970. I'll type this in. So this is 1962, and this is 1970, and this is 2022. Okay? So the good thing is now we have a few more months of trading. 1962, the market had a bottom in May and June. Oops, it's a little bit bigger. May and June, we had a bottom. We had a rally, and we did come back down through September, October into the lows. Now, we didn't break the lows, but we tested those lows. So there's a possibility that we're facing something similar to that after we had that July and mid-August rally, right? End of August, Jackson Hole, market started to drop and slip, and we've got that questionable momentum where September could just keep tipping the scales to the downside, right? But if we don't break the lows, if we don't break these lows from June, there's still some hope that the market might fight back for Q4 and finish the year, damaged less than what it was at the lowest point this year. Okay, 1970, we had a bottom, aggressive rally, very sharp pullback, but made a higher low. Push up again, pull back again, makes a higher low. Then the market proceeds to go for the rest of the year through Q4 and finish the year at break even. It actually finished 0.1% positive. This was negative 11% for the year after being down over 20%. So both of these years down over 20%. And again, this is the S&P. So comparable to what we saw in the S&P this year. We were down over 20%. We had our bottom in June. We rallied nicely all the way through July. We took out this high. But we met resistance. Technical resistance, we met it like perfectly right there. Okay, and so the market has turned pretty sharply off of that resistance. Now, the question is, are we going to take out this low from June? We don't know yet. If we do, I would say look at that pre-COVID high as your next major level of support. Okay, Next week I'll incorporate some tools. We'll talk about some potential landing zones and support structures and levels to trade in between. But it's always exciting time in the markets. But we have to pay attention to stuff. And like I said, I'm trying to block out all the noise and just trade the charts. I'm waiting for confirmation on some. I see the technical alignments where I'm looking at oversold conditions, overbought conditions. I'm waiting for those confirmations to start lining up for me. Um, but more importantly, is as far as the overall equities market, I'm trying to keep the analysis really clean. If the market falls, I have to be okay with that, and I've got to be positioned for it. The good thing is I am. If the market rallies, I've got to be positioned for that. I am. If the market goes nowhere, I've got to be positioned for that. I'll be fine. So it is going to be a battle of a year to make sure that we can hold our own and come out ahead. Either preservation of capital or profitable. It's been a tough trading year, right? But we will fight the good fight. Okay. All right, traders, I'm going to let you go for today. Thanks for being with me today for the bonus session for non-farm payroll. Job report wise, the U.S. missed, or no, I'm sorry, it exceeded the job expectation by like 20,000, right? So 295 expected, came in 315, but we had a slight revision by 2,000 jobs, but we missed on average hourly earnings, and we had a higher than expected unemployment rate. As we wrap up Friday, we're going to look and see what the dollar wants to do for the rest of the day, and it's a brand new week of trading next week. Now, we are going into a holiday week, so Wall Street will be closed on Monday for Labor Day. Forex will be open. Sometimes those sneaky little holiday weeks, we might have some volatility that nobody's paying attention to. So make sure you at least check your phone, check your MetaTrader charts, turn on, make sure you have chart alarm set in case anything crazy happens. I will not plan on doing a live session on Monday, but I don't know. I don't know. If I schedule it, I'll let everybody know. I'll post it in YouTube. Otherwise, I might just post a video. I might just get to my charts, take a look at everything. But I could also use a day off too. Okay. So anyway, Flex traders, I'll see you next week, Tuesday, Wednesday, Thursday. Equities on Demand students, let's wrap up class at 10 o'clock. And everyone have a fantastic Friday, great weekend. If you do me a quick favor, if you didn't, be so kind, hit that thumbs up button for me, like the channel. Let's get those live views to the thumbs up button, like this stuff. Anyone watching this recording, do the same thing. I appreciate it. And also, if you would kindly check out Beyond Capital Group, go to youtube.com, type in Beyond Capital Group. You'll see my face, Jared Johnson's face. We just started the channel last week. We're getting some subscribers in. I'm editing videos on it. We're going to start building out these playlists. Jared and I have a blast working together. We've known each other for 10 years, and now we're working together in full swing at a hedge fund. So we're making the best of it. All good? All right, buddy. Sounds good. Thanks a lot for being with me today. See you next week. Have a fantastic holiday weekend, and let's go.